Business and the markets today. Stephen Koukoulas joins us. Stephen, first up, RBA likely to cut again.
Likely to cut. Their meeting as we speak, and their announcements at 2:30 this afternoon Eastern time, and they're probably going to trim official interest rates to 1%, so a fresh record low. They're doing it because the economy is a little bit soggy, that we know inflation's low, wages growth is continuing to hover near record lows, so they probably just wanted to give us consumers with a mortgage a bit of an extra cash flow. We've got to remember that the business sector also has around $1 trillion of debt, so it'll help the business sector improve their outlook and improve their cash flow as well.
It's kind of extraordinary to see so much foreshadowing of these cuts from the RBA governor. Have you ever seen a governor be this vocal? Yeah,
look, they've been pretty open, and Phil Lowe's been very vocal. And in fact, for the last year or two, remember about a year ago, he was saying the next move was probably up. But not to be critical of him necessarily, but the economy's evolved. So they don't like to spook the markets. They don't really want to see the markets being shocked by a particular interest rate move. And I think what Dr. Lowe's trying to do with that is just forewarn the markets that, yes, the economy is weaker than they thought, there's no question. Inflation is stubbornly low, and they'd like to just give the economy that boost.
And how, in that context, how's the property market looking according to the latest data?
Yeah, well, it's interesting because we've seen just in the last maybe 2 months, so a little bit pre-election, but certainly post-election, when that negative gearing issue's now gone off the agenda, and of course we had a rate cut roughly 5 weeks ago. We've seen auction clearance rates pick up. So Sydney and Melbourne, which were the weak links in the local property market, auction rates have cleared up. We had CoreLogic data on house prices yesterday for the month of June. They're stabilising, so that decline that we'd seen for the previous 18 months or so is now starting to abate. So, look, it's a little early to be jumping up and down and saying that the housing cycle's about to turn higher, but the preconditions are there. Another rate cut today will be certainly very, very helpful. So the property market could be the leading indicator that suggests that 2020 could be an okay year for the economy.
Excellent. Stephen Koukoulas, thank you so much for your time.
Thank you.
Thanks, Stephen.